Dividend investors, bonjour, this is Mike Héroux, founder of Dividend Stocks Rocks and passionate investor. This week, I've received a lot of emails, lots of comments from my DSR members, and I thought, you know what, let's discuss GME, AMC, BlackBerry, all those crazy Wall Street bets investment coming from that platform called Reddit and try to explain you exactly what happened, but most importantly to understand what's gonna come up next. And this is the purpose of this video. I've actually did a thread on Twitter on January 26th explaining the market mechanism behind it. So today we're going to use that Twitter thread and I'm going to explain you, walk you step by step on what happened, what is going to happen next, and should you benefit from it or not? Should you trade based on that or not? Let's take a look at it. So basically what you have see here is on this graph, you have between January 29th and 19, and January 26th. Stock prices went up like there's no tomorrow, and actually it's kind of funny because I should have updated this graph because today at the time of recording it's even higher. So basically, what in the world could explain such a frenzy about companies that, let's be honest, they are not going anywhere? First, GameStop is like Blockbuster. They are selling video games in a brick and mortar classic business model. They are in shopping malls, so nothing to like. And let's be honest, my son has a PlayStation 4. He's looking to buy a PlayStation 5. He's gonna do it online. The latest Call of Duty, one of his favorite game, he downloaded it online, so there's absolutely no reason why he would actually walk up to the mall and buy it, especially with the pandemic. Now we have BlackBerry, lots of speculation on what they're going to do next, but honestly that's been a dead stock for a decade now, so why would it double and triple in value right now? Not much reason, right? And finally, AMC, movie theater business, losing money as you can imagine due to the pandemic. They're like this close to the bankruptcy, and yet the stock price is skyrocketing. Actually on January 27th, AMC went up by I think 300% or something like that. Those are just ridiculous numbers. So let's explain what exactly happened. So basically, imagine a group of friends that having our virtual beer on Reddit. So they're just gathering around and then discuss investment strategy, like an investment club, but social media makes it a much wider bar where you can have millions of people that gather on Wall Street bets and they discuss what they should do. One thing that was quite interesting here is they have selected a company like GameStop with a very low trading volume. The company was going nowhere, and even though the gaming industry is booming right now, their revenue are declining year after year. So it comes up a few guys on YouTube and a few guys on social media like Reddit saying, oh, they're gonna have a new business model, let's make some great position on that and see what's gonna happen. So basically what they do is that they buy a lot of stocks and they also buy a lot of options. This creates a huge position, and then it goes a little bit more viral. People are talking about it, and what you can see, the first thing you see is during the summertime, you can see that GameStop price is going up, and at the same time, the volume is a lot more important. So this is quite interesting, but it's not enough to make GameStop worth over $300 as it reached on January 27th, right? What really happens and what really gets interesting is when you get all the attention of everybody, you realize that there is a short squeeze, and the short squeeze is massive. Basically, how a short position works is you are making a bet against the company. You think the company worth nothing, and your bet is just saying, you know what, GameStop price is like $5-6, it's gonna go down to zero, the company is gonna go bankrupt. So basically they call their broker, they're usually huge hedge fund manager, they call their broker and say, hey, you know what, lend me those stocks that I don't have, I'm gonna sell them at $5, and whenever it goes down, I'm gonna buy them back, or it's gonna worth nothing, and then I'm just gonna cash the money, right? But then when you have a pile of people buying the same stock, what's happening is that each time the level of stocks increase, the broker calls the short seller and say, hey, you have to put some money on the side for that. I'm not going to let you short like $100 million or $1 billion in stocks with no proof that you have cash or assets elsewhere. And this is the fun part that starts. The group of buyer is really well organized, and some people there, the initiators, let's say, they understand how the short squeeze would work. And as you buy more, you're going to put more pressure on the stock price and more pressure on the shorters. But when you go one step further, and where you don't see that right now, is how option works. When you buy options, it means that you're buying like call option, okay? So basically the investor is saying, oh, I'm going to buy options to buy this stock at this price in the next couple of weeks or couple of months. On the other side of the trade, if you're able to have the right to buy a stock at a specific price, you must have someone on the other side of the trade telling you, oh, I'm willing to sell you GME stock at $150 in 2 weeks. And here's the play that comes. The more the price goes up, the more the seller of the option, which is usually, again, you guessed it, a hedge fund or a Wall Street trader, he has to hedge his position, because at one point in time, he may have to sell those stocks to the option buyer. So at first, and we call this a delta. So at first the delta is very small, because if the stock price trades at $20 and I want to buy calls at 50 or 70, there's such a huge gap that the writer of the option, the seller of the option, just like, yeah, I don't need to hedge that much, so my delta is small. I only have to hedge, let's say, like 10 or 20% of my position on that. There's no problem. But as the stock price goes up, the call option is getting closer to the strike price, and at this point, the writer of the call have to hedge his position to 50 to 80% to at one point 100% if they're what we call in the money, meaning that now they have the right to buy the stock at $150, but the stock prices is at 300. Well, obviously someone will have to deliver, right? So this put even more pressure on the stock price, because now you have people buying it, people buying options, and then people needs to make their edge buying the stock at the same time. And here's come the short squeeze. So the broker follows those transactions very carefully, pretty much as the hedge fund manager, right? And then at one point, they're just like, dude, you're losing $1 billion or $2 billion on that trade. And I'm not willing to keep going on that trade, and therefore I want you to close your position. And what's happening at this point is the guy has to buy the stock to cover his position and put so much money in the stock market that, you know what? There you go. You get a stock price that goes up even higher with a stronger volume at the same time. Now, this is all fun and funny, but really, how does it end? Well, it will end badly, and I'm explaining you why. What's going to happen is, in most cases, the short sellers, especially right now, because this community of investors are going so all in, and they're putting so much money into it that it looks like they will win over hedge funds. But the hedge fund will go belly up. It's going to cost them billions of dollars, and we're not going to cry over them, because they know what they're doing. And actually, I think that short selling is kind of like being a sore loser. It's like tanking when you're in the NHL, you don't have a good team, and then you're trying to lose all your games to get something like a good position at your draft. So basically, short sellers are going against the investment thesis of making money by buying a productive asset. So I'm not going to cry over them, but once they are dead and once the party's over, what's going to happen? I mean, imagine GameStop is not a good business. It's not a thriving business. AMC is still this close to bankruptcy. So what's going to happen is, and I'm not going to use a fool's game because I don't want to offend anybody, but it's a believer game. So basically, you buy GME stock at $100. believing that you're going to sell it to another believer that will be willing to pay $150. And the guy who sold it to you at $100, well, he made his money in the past and he's just selling because he's making money out of it. And the problem with that is one day you're gonna wake up and you say, well, I'm done with that. I've made a lot of money on it and it was easy money over like a week or even a few days. So I'm gonna turn over and then sell to the next guy. But there's no more next guy. The short squeeze is over, and who's gonna buy GME at $500 when the war is over? Nobody. So what's gonna happen to your GME shares? Well, they're gonna go down. So basically, if you are able to get out of those kind of stocks fast, you're going to make a ton of money and it's great. But how it's going to end? It's going to end with a handful of millionaires and a lot of retail investors that will lose their shirt over that. And this is the sad part. If you're willing to put like 3% or 5% of your portfolio in a gambling strategy like this and try to make it fun, that's totally cool. But if you're putting like $50,000 and it's like all your assets and you're hoping to retire rich on that, and then you don't move quick enough, you're going to end up with nothing because the company worth nothing. You know, the parallel that we have right now is really the same thing as we had back in 1999 with the tech bubble, where you only have to have .com in your name and you would raise billions of dollars. Now it's pretty much the same thing. Everybody goes on this new trend. They buy GME because there's a hype. They buy AMC or even COS. But in the end, there's no value in there. So if you want to go in that, it's just creating a lot of noise. You can make money, but understand that the company is not worth $500. And one day, believers are going to be gone. And on that day, well, the stock price is going to go down and it's pretty much the end of it. So I hope that you have found this video interesting, that you have learned a little bit more about what's going on there. I think it's going to happen a few times more. I've actually highlighted in this tweet AMC, which was at the very beginning of that trend. So if you want to go into that, yes, there's room for that. But unfortunately, if you're making money, you're just ripping off another retail investor. So yeah, there's that big narrative that there's a fight between retail investors and hedge fund managers. But once the war is over, it's not only hedge fund managers that are going to pay the note. Everybody will have to clean up the mess. So think about it. I hope that you have enjoyed it. Enjoy your weekend. And until next video, stay invested.